You are not competing against other investors anymore. You are competing against machines. Machines that have already processed tomorrow's data, priced it in, and positioned against you before you even open your chart. 3 days before a stock moves, the signal already exists. Not in the news, not in analyst reports, but inside systems most people never see. The institutions are not reading reports anymore. They are running models. They are not watching the news. They are processing it in real time through artificial intelligence systems that analyze millions of data points before a single human even opens their laptop. By the time retail sees the move is already over. And the result? The gap between informed investors and uninformed ones has never been wider. But here is what nobody tells you. The same AI tools that institutional desks are using are now accessible to individual investors. Not a simplified version, not a watered-down alternative. The actual technology. Today, I am going to show you the exact AI systems that are reshaping the investment landscape in 2026. And by the time this video ends, you will know which ones to use, how to use them, and why waiting any longer is costing you real money. This is Stratovest AI. And this is where precision begins. Let us start with the problem most investors refuse to admit. The market in 2026 moves at a speed that human analysis simply cannot match. In the time it takes you to read a single earnings report, an AI system has already processed that same report, cross-referenced it against 47 macroeconomic indicators, compared the language to 12 years of similar filings, and generated a probability score for how the stock will move in the next 72 hours. That is not an exaggeration. That is the baseline capability of modern financial AI. The market does not reward effort anymore. It rewards speed. And if you are not using these tools, you are not competing on the same field. You are competing on a different one entirely. The first system removes the biggest blind spot in the market, emotion. Stratovest is an AI-powered market intelligence platform that does something most investors have never thought to measure systematically. Every minute, Stratovest scans over 1 million sources, financial news, social media platforms, regulatory filings, analyst commentary. It converts all of it into a single real-time sentiment score for any asset, sector, or market you are tracking. Why does this matter? Because markets do not move on fundamentals alone. They move on the collective emotional state of participants. When fear dominates, prices fall regardless of underlying value. When optimism peaks, prices rise beyond rational justification. Stratovest gives you a number for that emotion, a score between 0 and 100. In February 2026, that score for semiconductor stocks crossed 78 before the sector posted a 14% gain over the following 3 weeks. The signal was there. Most people missed it because they were measuring price, not psychology. This is not sentiment analysis. This is measuring crowd psychology before it moves price. You are not early. You are late by default. Unless you know where the money is moving before the move happens. But here is where things get dangerous. This is where you stop guessing and start seeing the money itself. Unusual Whales uses AI to identify institutional footprints in real time. Every day, billions of dollars flow through the options market. Hedge funds, pension funds, sovereign wealth funds. They place large directional bets before major moves happen. These positions leave a footprint. Unusual Whales finds that footprint before the move completes. In January 2026, the platform flagged a series of large call option positions on a mid-cap energy company 3 days before the company announced a major acquisition. The stock moved 23% in a single session. The signal was there. The question is always whether you are paying attention. You are not guessing anymore. You are following the money before the move happens. Right now, most people watching this video will ignore these tools, and that is exactly why the gap will keep growing. If this feels overwhelming, that is exactly the point. Because the market is no longer built for manual thinking. The third system eliminates the subjectivity that destroys most technical analysis. TrendSpider automatically identifies chart patterns, support and resistance levels, and trend lines across multiple time frames simultaneously. Most technical analysis in 2026 is still being done manually. Investors draw lines by hand, identify patterns by personal interpretation, make decisions based on subjective visual judgment. TrendSpider removes that entirely. The system matches current price action against thousands of historical pattern instances and generates a statistical probability score for how the current setup is likely to resolve. A cup and handle formation with an 82% historical success rate across 3,400 instances is not a guess. It is a data-backed edge. This removes opinion from the chart and replaces it with probability. Now this is where most people stop watching. And that is the most expensive mistake they will make, because the next two systems are where real institutional separation happens. Kavawant runs a proprietary AI model called K-Score. It evaluates individual stocks across over 200 variables simultaneously: price momentum, earnings quality, institutional ownership trends, insider transaction patterns, macroeconomic sensitivity, sector rotation signals. Every stock receives a K-score between 1 and 9 every single day. A score of 8 or 9, highest probability long opportunity. A score of 1 or 2, high-risk setup that institutional models are actively avoiding. And what makes Kavawant powerful is what it does not factor in. Not media narratives, not social media hype, not emotional market cycles, pure data, pure probability. In back-tested data across 5 years, K-score 8 and 9 stocks outperformed the S&P 500 by an average of 11.4% annually. That edge does not come from working harder. It comes from seeing clearer. The fifth system is the most complete institutional intelligence infrastructure available outside of hedge fund infrastructure in 2026. The Bloomberg Terminal AI layer processes earnings transcripts, Federal Reserve communications, geopolitical event data, and macroeconomic releases simultaneously. It flags emerging themes before they reach mainstream financial media. The average news cycle takes 6 to 14 hours to move from event to coverage. Bloomberg's AI layer captures it in under 4 minutes. In a market where speed is leverage, that gap is everything. Now let us bring all 5 systems together into a framework you can actually execute. Step 1. Build your sentiment baseline on Sentify every morning. Before you analyze price, check psychology. Step 2. Monitor institutional flow on unusual whales. When sentiment is bullish and institutional positioning aligns, you have a confirmed directional signal from 2 independent sources. Step 3. Confirm with technical structure on TrendSpider. If the technical setup agrees with what sentiment and flow are already telling you, you now have a 3-layer validated position. Step 4. Rank your opportunities using Kavawant. Only proceed with K-scores of 7 or above. This filters high-probability setups from merely interesting ones. When all 4 layers align, you are not making a guess. You are executing a systematically validated position. This is how institutional desks think. This is how elite investors operate. And in 2026, this infrastructure is available to every investor willing to use it. At Stratovest AI, this is the standard we operate by. Data over narrative, systems over instinct, precision over noise. This is not about learning tools. This is about deciding which side of the market you want to be on. One side reacts, the other side anticipates. One side follows the narrative, the other side decodes the signal behind it. One side is guided by the system. The other side understands how the system guides. Subscribe to Stratovest AI, because next week, we will show you how AI predicted the last 3 major market corrections before they happened, and exactly what signals to watch for in the current cycle. That is a video you will not want to arrive at late, because in this market, you are not losing because you are wrong. You are losing because you are late. And in a system that moves at machine speed, late is the same as invisible. This is Stratovest AI, where the invisible becomes visible and where your edge is engineered.